Welcome back. You're watching The Money Show, and it's time to get your mutual fund portfolio queries answered. And today, the expert we have is Pankaj Matpal, and we also have our first viewer connected, Mr. GVK Reddy. Good evening, sir. How are you doing today? You're calling from?
I'm calling from Hyderabad. I'm doing great.
Thank you so much for sending us your questions, sir. And you want to invest for next 5 years, and minimum amount is 5,000 rupees. And you have selected a few funds: Mirror Asset S&P 500 Top 50 ETF, Nippon India ETF, Nifty IT, Kotak Nifty Alpha 50 ETF, HDFC Mutual Fund. Okay. Again, an ETF over here, Nippon India ETF, PSU Bank Bs, and Mirror Asset NYSE Fan Plus ETF and CPSC ETF. Any specific reason why you're interested only in ETFs for investments?
Yeah, the reason behind that is for last 5 decades, if at all I personally review it, the ETFs are performing on an average of like 20 to 40% on year growth.
Okay. All right. So you want your entire portfolio to be around ETFs. Is that right?
Yes. Yes.
And you'll be invested for 5 years. Is that the only time frame you're looking at?
Currently for 5 years are there. Then depending upon the market situations and other things, I'll change it.
Sure. All right, let's get connected to Pankaj now. Pankaj, okay, it's not new, and like Mr. Reddy, a lot of investors we come across who really trust ETFs in terms of churning returns for them a lot these days. But then having your portfolio built around ETF, how is that as a strategy? Would you recommend that?
See, one can definitely build a portfolio through ETF, but there are different types of ETFs available. But Mr. Reddy, as you mentioned that you has experienced 20% to 40% returns from ETF, it is very difficult actually, because if you invest in Nifty 50 ETF, your returns can't be more than Nifty 50. So your expectation should be something like 15% around from ETF. Maybe that you're investing in some sectoral ETF. So during some time period, you can expect higher returns than the broader market. But in long term, I'll say that if you invest in Nifty 50, the returns will be as the growth of Nifty 50, or you invest in bank ETF, it will be same like banking index performs. But as you have selected too many ETFs, my suggestion would be that you should have only 4-5 ETFs, so that you get allocation across market caps, some like domestic as well as international. So out of the ETFs which we have selected, my suggestion would be like Mirror Asset S&P 500 Top 50 ETF, which is an international ETF. You can keep this in your portfolio. Along with this, Mirror Asset Nifty Multi-Cap 50, 20, 20, 50, 25, 25. Though you have not mentioned about this, but my suggestion would be that it's a multi-cap ETF. This you can consider. So Mirror Asset S&P 500 50, 25, 25 ETF. And one you have selected CPSC ETF. This is one good ETF to have in your portfolio. You can go with this. Now, HDFC Mutual Fund Gold ETF that you have selected is a gold ETF. So returns you can expect something like 10 to 12% CAGR basis. But this can be in your portfolio. So as I have mentioned here, total 4 ETF, that is my recommendation. Along with this, if you have something like IT or others you have selected, you can keep them in your portfolio, but then you have to understand when you have to exit. Right now, technology sectors looks good, but any sector or any theme means there will keep on rotating. So you have to understand when to exit, because right timing to enter and exit in the sector is very, very important. Returns wise, as I mentioned earlier, 12 to 15% from these equity ETFs, or something 10 to 12% from the gold ETF should be the fair expectation.
All right, Mr. Reddy, is there anything else that you want to ask Pankaj?
Thank you very much, PTA. Now,
All right. All the best. Let's move on and let's take Mr. Kaushik's question. This question is from Hyderabad, and he's investing 60,000 via SIP in large, and I think he's on the phone line also. Mr. Kaushik, hi, good evening, sir. Thank you so much for sending us your question.
Yeah.
So you are doing 10,000 SIP each in Quant large and mid cap, Motilal mid cap, Quant small cap, Parag Parikh flexi cap, SBI Contra, and you have a value discovery fund from ICICI Pro. Is that right?
Yes.
And you'll be investing for how long?
Hello.
Yeah, you'll be investing for how long?
5 years now.
For 5 years. Okay. You've been investing since how long?
I've been investing from 2021, so just wanted
Okay.
to check whether the return is about like 30% is the profit currently on all these things.
Sure.
So just want
Sure.
to understand, just want to go ahead with these things for the next 5 years, or anything needs to be modified, or any alteration in the SIP numbers.
Any
these,
specific
fixed
corpus
funds.
that you want to accumulate? Any specific corpus that you want to accumulate via these funds and this investment?
What do you mean by that?
Any specific amount that you are looking at to be collected from this portfolio? Any corpus?
Nothing, ma'am. Like, I'm just like checking whether these funds are good enough to stay
Okay.
invested for the next 5 years, or like you want
Okay.
me,
Sure.
since like if you think like any of these funds might be down performing in the near future, degrading of like the SIP from 10,000 to 5,000, or
Right.
and then use that amount in any of the new funds like which
Got
are
it.
outperforming. So I just want
Got
to know
it.
whether the SIP numbers of these funds are good enough, or any modifications needs to be done.
All right. Pankaj, there is no specific financial goal attached to this investment, but then a very important question is, will these funds perform in next 5 years? Or if we see the performance getting out of track, is it the right time for him to make any changes? Well, Kaushik, all the performance of these funds is market related. So one has to really track the market very well, because that performance reflects in the fund's performance also, and no one can actually predict what's going to happen in next 5 years. So but apart from that, Pankaj, how would you guide him to stick to this portfolio and the kind of funds that he's looking at? He started investing in 2021, so more 5 years for him, if that's a time frame that we take.
See, Kaushik, all the funds are good, but only thing is that investment horizon. Now, if you consider 5 year what you have already invested in, and plus additional 5 year, considering 10 years time horizon, definitely these funds are good. But going forward, one thing, because small cap, mid cap allocation is good in your portfolio, you must have seen good performance. But going forward, you cannot expect something like 25-30% returns on CAGR basis. My suggestion would be that if you want to reduce some exposure in small cap and mid cap, that will be a better idea, because you have gained a lot from these funds. Now, if you reduce some exposure in small cap and mid cap, that would be a better strategy, because now, as you mentioned, that your investment horizon is only 5 years from now. That is one. Otherwise, the choice of scheme is really good. If you have more 10 years in your hand, I would say that you continue with all the schemes. But considering 5 years time horizon, you can reduce some exposure in small cap and mid cap. Second thing, because in last 5 years, you must have accumulated a good amount of money. So whatever is there, that is. In addition to this, if I calculate, for example, somebody is investing now 60,000 per month, even you can expect something like 1 crore rupees additional corpus in next 5 years. So whatever you have accumulated, that may double in next 5 years if you expect a 15% CAGR around means. And in addition to this, 1 crore rupees more you can expect by this investment, 60,000 rupees every month for next 5 years. So accordingly, you can see that how much total corpus you will have.
All right. Is there anything else you want to ask, Mr. Kaushik?
Just one thing, like you were
Sure.
asking me to reduce it in small and mid cap, right? So that amount, like, where do you want me to invest, in the same funds or like in a new fund?
All right, Pankaj?
Yeah, Kaushik, you don't need to add any fund because you have 6 funds in your portfolio. And good thing is that means these are well diversified funds. So my suggestion would be if you reduce your exposure to mid cap and small cap. So SBI Contra Fund, for example, you can top up that Parakmarik Flexi Cap Fund and even Quant Large and Mid Cap Fund. You can top up these funds if you and whatever amount is already invested, you stay invested. Only I'm talking about SIP amount. So future SIP you can reduce in these small cap and mid cap, and you can top up your these funds which I have recommended right now.
All right, all the best, Mr. Kaushik. Let's move on, and think I have Mr. Siva on the phone line with me. Good evening, sir. You're calling from?
Ma'am, good evening, madam. I am from AP, madam.
All right, sir. Thank you so much for sending us your question, sir. I can see that you are doing an investment of 14,000 per month.
Yes, ma'am.
Okay. So you have Mira Asset Large and Mid Cap, you have DSP Mid Cap, HDFC Mid Cap Opportunity, ICICI Mid Cap, Axis Mid Cap, HDFC Multi Cap, Kotak Flexi Cap, Nippon Small Cap, Mahindra Manulife Hybrid Fund. Why so many mid caps? Any specific reason, sir?
No, ma'am. Actually, when I'm starting this, I don't have that much knowledge. As per suggestion, I have that every year we add a step, madam. Instead of increasing step up, I have added one fund, madam.
Okay. Okay, got it. All right. So you said you want to invest for long term. So if I just want to quantify and give it, how many years are you talking about in long term?
Madam, about 10 years, madam.
More than 10 years?
Purpose. Yeah, yes, madam.
Okay. Okay. You also want to do a lump sum investment in these funds?
Yes, madam. Approximately, I am expecting for 50 lakhs, let's say.
50 lakhs investment in these funds?
Yes.
Okay. Got it. Okay. So, Pankaj, what do you have to say?
Yes, Siva, see, you don't need 9 funds in your portfolio. If you want to invest 14,000 rupees per month, let me redesign your portfolio. See, the funds you have selected, out of that only, I have selected few of them. So Mira Asset Large and Mid Cap Fund. In that, you start SIP of 3,000 rupees per month. SDFC Mid Cap Opportunities Fund, 2,000 per month. SDFC Multi Cap Fund, 4,000 per month. Kotak Flexi Cap Fund, 3,000 per month. Nippon India Small Cap Fund, 2,000 per month. So this 14,000 I have divided in these 5 funds. So that will be a better choice. But for your lump sum, what lump sum amount you want to invest? See, out of this Mira Asset Large and Mid Cap Fund, Kotak Flexi Cap Fund, you can have some amount. You can allocate some amount in these funds. At that also not lump sum like right one day. You can invest through STP route. But along with this, my suggestion would be at this point of time, if you invest in multi-asset allocation funds, that can be a better choice, and balance advantage fund is another choice. So in multi-asset allocation fund like ICICI Prudential, multi-asset fund, and in balance advantage category, SDFC, balance advantage fund, Mahindra Manulife, balance advantage fund, these funds can be selected. Going forward, after some time, maybe it's after 1 year, 2 years, when market valuations are reasonable, then you can again switch to multi-cap and flexi-cap. But because you want to invest a big amount in lump sum, in that case, my suggestion would be that you should start with hybrid funds.
All right, so that's the solution coming up for Siva, and with that, it's a wrap up on the show also. Thank you so much, Pankaj, for being on the show and helping our viewers. And I'm going to leave our viewers with our WhatsApp number and email ID where they can send across their questions. Thank you so much for watching. Goodbye.
If you like this video, then like, share and subscribe to ET Now.